Most investors get paid every quarter. Some income-focused investors upgrade to monthly payouts. But what if you could push it even further, getting paid a dividend every single trading day the market is open? Thanks to the rise of weekly dividend ETFs, this is now possible. By carefully selecting ETFs that pay different days of the week, you can now construct a portfolio that delivers consistent daily cash flow, Monday through Friday. And there's now 50 different ETFs that you can choose from. And this is more of a follow-up video to our previous one, highly requested to create a daily dividend portfolio using some of the weekly dividend ETFs on this list. And in this video, we're going to explain the concept of a daily dividend strategy, show the list of available weekly dividend ETFs and their paydays, and build a sample portfolio that pays you every single day, as well as discuss the pros, cons, and risks of this approach. Let's dive in. Weekly dividend ETFs are funds that distribute income every single week, typically on the same weekday each time. They do this not by holding stocks that magically pay weekly, but by using options-based income strategies such as covered calls, cash secured puts, or index or sector overlays that generate option premiums. And some of the big names in this space are going to be Roundhill, YieldMax, RexShares, and GrandShares that have all launched innovative ETFs offering weekly payouts, each with its own unique strategies and underlying assets. And many of these ETFs do have very high yields, which is very favorable for income-focused investors, some even exceeding 20% annually. But of course, these funds are very new to the market, so investors need to understand that they should monitor the performance and understand that there are risks involved. Now let's check out the pay schedule for every single weekly paying ETF. All 50 is on this list right here, and as we can see, they are spread out throughout the weekday, so we can choose an ETF or two from each day of the week to construct a daily dividend ETF portfolio. And who doesn't love getting paid every single day? Many people loved getting paid monthly, and then weekly paying ETFs came out. Everyone loved that, but this takes it a step further, and it gives you incredible dopamine by getting a dividend every single day. And I feel like if we could, a lot of people would love to get paid dividends on the weekend as well, but the markets are not open on those days, unfortunately. But who knows, in the future, anything can happen. So let's start off with the Monday column, which is going to be blocks, MAGI, and MMKT. Now, I do want to note that MMKT, of course, is not really an income-focused ETF. It is a weekly dividend-paying ETF, but it is simply just a market fund. If we take a look, it's going to be the Texas Capital Government Money Market Fund ETF. You're basically not going to lose any money. You're not really going to gain much either. It has a dividend yield of about 3.52%. And if you take a look at the holdings, it's just short-term treasury bills. But it does pay out weekly, so if you're looking for a money market fund that pays out weekly, because most money market funds do actually pay out every single month, this is going to be an option for you. But in my opinion, I'm a huge fan of SGov, which actually has a slightly higher total return than MMKT, so I choose SGov over MMKT for that reason. So the two big contenders in this space is going to be blocks and MAGI. You're not really going to have too much options for the Monday payout, but that of course is going to be subject to change as many investors are requesting more ETFs payout on a Monday. I do think these two are great options. Blocks is going to give you that crypto exposure, and MAGY is going to be a covered call strategy on the Magnificent Seven, which is going to be basically the top 7 tech stocks. So it's really your pick. Do you want to invest in the tech sector, or are you more crypto focused? But we do want to note both MAGY and blocks are very new and have only been out for a few months now. So there's not much history to it, but they have been performing exceptionally well, especially blocks up 18% in share price while paying out pretty high distribution rate as well. But we do want to note that we have been in a serious bull run. MAGY is up almost 9%. So this is the perfect market conditions for these two ETFs. Based off of MAGY's last distribution, which was about 38 cents, we can calculate what the actual distribution rate is, because the 8% dividend yield that you're seeing is not accurate, as there's not enough history and it hasn't been out for a full year. So if we head over to our calculator and input the distribution, which was 0.386, and we multiply that by 52, because it's going to be 52 weeks, we're going to get about $20.07. Divide that by the current share price, which is going to be about $57.29. And it's going to be about a 35% distribution rate, a really respectable distribution rate. So if you really like tech, this is going to be one for you. But I do think that YMAG has had a better total return. So I'm not going to be choosing MAGY for the Monday holding. I'm actually going to be choosing Blocks, which has had an insane run up and pays a similar weekly dividend. Our spreadsheet will just mark this as green to indicate that that is going to be our pick for the Monday weekly payer. Now, Tuesday is where things get interesting. It has the most weekly paying ETFs, which is very interesting because you would expect Friday to be the most, but it's all because of Roundhill's weekly pay lineup. Most of these ETFs that end in a W, AAPW, AMDW, AMZW, and so on, are most likely going to be part of Roundhill's weekly pay ETFs lineup, which is an innovative fund series designed for investors seeking weekly income and amplified exposure. Keyword on amplified, because these are going to be 1.2x leveraged exposure to the underlying. It's going to be a first of their kind ETFs aiming to provide weekly distributions and enhance returns equal to 120% of the underlying stock. And of course, before fees and expenses. And with most of these ETFs, you can expect at least 1% expense ratio, 1 to 1.3%. Because these are all actively managed, they're using option strategies, and with the high distribution rates, 1% is pretty reasonable for the space. And so all of these ETFs by Roundhill are going to be paying weekly, and they're going to be paying out every single Tuesday. Now they have a lot here. It's about I think 15 ETFs that they have, all single stock tickers. So AAPW, for example, is going to have Apple as its underlying. And in my opinion, I'm not a huge fan of single stock ETFs. You have way too much exposure to the underlying. So if they have one bad earnings call or they're on a prolonged bear market, that fund is going to get absolutely hammered. And that's why I like a diversified portfolio basket of stocks for my ETFs. And especially ones like AVGW, which is going to be Broadcom. Some of these ETFs don't even have that much volatility for its underlying. And some other examples would be Microsoft, MSFW, or even Berkshire Hathaway, BRKB. But if I had to pick one of these single stock ETFs, I would probably pick the NVIDIA one. I'm a huge fan of NVIDIA as a company, and especially with the rise of AI, this is definitely a company that's going to excel, or even Palantir, PLTW, for the weekly pair. So there's really not too many options if we get rid of all of those Roundhill ETFs. Of course, we have COYY, which is the Yield Boost Coinbase ETF. And this is by Granite Shares, their Yield Boost Coinbase ETF. And it's going to have even more leverage. It's going to be 2x long Coinbase. Most of the Yield Boost lineup is going to be either 2 times or 3 times leverage. But in return, you're going to have a very high distribution rate. And COYY has one of the highest, if not the highest, distribution rates in the space, coming at 180% based off its last distribution. Absolutely insane. NVYY is going to be similar. It's going to be the yield boost NVIDIA ETF. And of course, that's going to be 2 times leverage. Then we have I. It's going to be 3 times leveraged on the NASDAQ index. And of course, similar strategy, it's going to sell covered calls. And then we have TSYY, yield boost lineup, of course. And that's going to be on Tesla, 2 times leverage. And then we have XBTY, which has done exceptionally well. And it would be my personal pick from the yield boost lineup. If we actually compare the total returns of XBT, comparing it to BitB, which is just the Bitcoin spot ETF, we actually have a higher total return of 14% compared to Bitcoin, which is going to only have a 12% return. And of course, this is a newer ETF, so we only have about 3 months worth of data, but it has been outperforming the underlying, which is not something you usually see with these covered call or option strategy ETFs. So for Tuesday, you either have the Roundhill single stock ticker ETFs, or you have the Granite Shares Yield Boost lineup. I'm not a huge fan of any of these choices, even though we have the most ETFs in this day, but I would probably have to go with the Yield Boost lineup, whether it be XBTY or TQQY or YSPY. YSPY is 3 times leveraged the S&P 500 by Yield Boost. I do believe that XBTY has been one of their top performers, so I'm going to be choosing XBTY, even though we're already having some crypto exposure with the blocks. Now for Wednesday, we have 5 options. We'll start with WEEK. Now WEEK is going to be very similar to MMKT. It's not really an options-based ETF. If we take a look at the history, you're not going to lose any money. It's going to stay around $100 per share, just like MMKT, but you're also not going to get rich off this ETF either. It's going to be paying you about 4% yield annually. And if you take a look at the holdings, it's just a bunch of treasury bills. But if you are looking for a place to park your cash and you want weekly dividends, this is a great alternative to a money market fund. Now, the COII, MSII, NVII, TSII, these are all going to be by REC shares. And they are going to, of course, be single stock ticker ETFs. So COII is going to be Coinbase. This one is going to be MicroStrategy, I believe. NVII is going to be NVIDIA. TSII is going to be Tesla. This is part of their REC shares growth and income ETFs. If we go over to, say, Coinbase one, this one has a pretty high distribution rate of 122%. Now, of course, many of these distribution rates are subject to change, but it is good to monitor what they currently are. And if we take a look at the objective of COII, which is going to apply to the other 3 REC shares ETFs, you're going to have 1.5 uncapped upside potential, which is pretty huge because a lot of the other covered call ETFs, especially the ones by YieldMax, which have been one of the biggest ETF providers, those have capped upside because of the covered calls that they're selling. So this one is going to have capped upside potential, most likely because it's not going to sell covered calls on every single share of the underlying. And it's going to combine it with weekly income via covered call strategy. In return, you're getting a balanced mix of growth and income, which they believe is going to be pretty healthy. But the first and foremost primary investment objective is the weekly paying distribution. So it's going to be income first. The second investment objective is to seek daily investment results, which is going to be between 105 and 150, the daily percentage change of the common stock of Coinbase or the other underlyings. Now let me check and see if it is also going to be leveraged for some of these other ETFs. If we scroll down, yes. So these are also going to be leveraged, which is going to give you that upside potential. But of course, when they are losing leverage during downturn markets or corrections, these are also going to drop quite a bit as well. Leverage works both ways, and that is part of the risk with these investments. But since there's not many options, I would have to choose out of these 4 NVII. So we'll mark that green. And then we are moving on to Thursday. Only 4 ETFs on this day. The first one is going to be BCCC, which I believe is a Bitcoin covered call ETF. So this is one that's actually going to be by Global X, the Bitcoin covered call ETF. And this has been out for only a few months now. It has a relatively low expense ratio compared to the others in the space of only 0.75%. And if we take a look at the total returns of BCCC to the Bitcoin spot ETF, it's actually outperforming the underlying, which is kind of crazy as well. So it's a very good performer, and it's definitely one to consider as well. But of course, we have MST, which is the Defiance leveraged, I believe, MicroStrategy cover call ETF. So this one is going to be by Defiance, pays out weekly, has a distribution rate of about 72%. Used to be a lot more, but MicroStrategy has had lower implied volatility, so distributions for MST as well as MSTY have been a lot lower than what they used to be. Because of the poor performance of MSTR, especially since this one is leveraged, this one has not been doing as well as people have wanted it to be. But this is a very unique ETF because it's going to be leveraged long as well as income focused, because it's going to seek long-term capital appreciation. You're going to have the upside potential that MSTY has lacked, and it's standing out because it's using leverage approximately 150 to 200% of the underlying MSTR, which is going to help investors capitalize on stock volatility and growth characteristics. And of course, it's going to have the income strategy seeking to generate income through credit call spreads. So I'm not sure if they use covered calls as well, but this one is going to have call credit spreads, which is a little bit different of a strategy. It's going to use less capital to open up those options. So this is definitely a little bit more risky than MSTY in my opinion. But if you're a huge Bitcoin bull, huge MicroStrategy bull, this is a great ETF for you. And then we have the 2 Roundhill ETFs, YBTC and YETH, which are going to be the Roundhill cover calls on Bitcoin as well as Ethereum. Now, these have been out for quite some time now, since January of 2024, and it has a dividend yield or distribution rate of 44%. And considering since January 2024, it's only down about 2 to 3%, absolutely insane. We want to check out the total returns, and we can actually see it's up 26% year to date, slightly outperforming the Bitcoin spot ETF, but we can see that over the long run, because it's using that cover call strategy, as we mentioned earlier, you're going to have that capped upside. And the past year or two, Bitcoin has been on an insane run, so it is up 187% compared to 100% YBTC. But that's really the trade-off for some of these cover call ETFs. You're trading income, you're getting the income in exchange for potentially capping your upside potential in share price, which YBTC has been flat for the past year and a half now. Now, similar to YBTC, YETH has not been doing as well. It's down 40% all time, and it came out around September of 2024, and it's selling covered calls on Ethereum, or specifically ETHA. And if we compare YETH to ETHA, it's severely outperforming the spot Ethereum. We can see it's down year to date 13% compared to ETHA, up 35%. So a lot of people have not been a fan of YETH, but Ethereum has been on an insane run lately. That is why we're up about 84% total return for the Ethereum spot ETF. But an interesting thing to note is if you had invested in YETH at inception, you're up a positive 7.6%. Because it is an income-focused investment and you want to focus on the total return. So even though it's down 40% since inception, you still are positive in the green. So honestly, not too many choices here. You either have more crypto exposure or you have a riskier investment with MST. But for this, we are going to choose MST. I do think that MSTR is going to have a comeback. Implied volatility is at its lowest. So I think in the future, this has a lot of room to grow. Now, of course, this is not investment advice. This is just for entertainment purposes. We are just constructing this daily dividend ETF portfolio for fun. And this is really something that's interesting to track and have some fun playing out some scenarios. Now we are going to move on to Friday. You're going to find a lot of the yield max ETFs. We have CHPY, GLDY, GPTY. GLDY is not, I think that might be Defiance, but RDTY, SDTY, ULTY, everyone should be familiar with that one. USOY, LFGY, QDTY, MagYMax, and then you have Roundhill ones, RDTE, WDTE, XDTE, QDTE. WDTE is actually Defiance, same with QQQY and IWMY. Now, I'm not usually a huge fan of Defiance. Of course, total return is everything, but you really don't want to see something like this that just trickles downward. So I'm usually not a huge fan of these Defiance ETFs on these indices. So I'm not going to choose IWMY, WDTE, or QQQY. I think the obvious choice is, of course, going to be ULTY. It's been absolutely amazing. It's had a really good total return. It's actually positive since inception, which is kind of crazy considering how bad this ETF was when it first came out, until they did the strategy change where they're actually holding their underlyings, changed it from monthly to weekly, as well as buying protective puts for some protection. But there's a lot of good ones on Friday. You could very easily choose GPTY if you're a huge AI fanatic. If you're a huge fan of the 0 day to expiry ETFs by Roundhill, XDTY or QDTY, XDTE or QDTE are great picks as well. I have many of these in my own portfolio. YMAG and YMAX, absolutely amazing. So there's a lot of choices you can have for Friday. We're actually going to be choosing some follow-ups. So instead of choosing just one from each week, we're going to color in some orange. That would be a secondary pick. Now, of course, MAGY would have to be the secondary pick for Monday. And then Tuesday, maybe we would choose COY, but there's really not much choices. I don't want to choose those single stock ticker ETFs by Roundhill. So it's either going to be COYY, TQQY, or YSPY. I may have to choose COYY because it pays an insane 180% distribution, but we're going to highlight TQQY as well as a runner-up, just so we have some diversification. Wednesday, there's not much. We don't want to have COII or MSII as overlap because we already have MST and we already have COYY. Maybe we'll do TSII, but I'm really not a huge fan of many of these weekly pairs on Wednesday. I may have to just choose WEEK. I know that sounds silly, but this is going to give you some safer income on Wednesday. Thursday, I either have to choose BCCC or YBTC. I think YBTC has been doing really well, but BCCC has the higher total return for that weekly pair. Now for Friday, we have a lot of great options. I'm going to have to put YMAX, which is the Yield Max Fund of Funds. You're going to have that diversification. You're not going to choose one of these single stock ETFs like we're forced to with Roundhill's weekly pay lineup. I do believe that they're coming out with a fund of funds just like Yield Max, which is going to be absolutely amazing and something that I would invest in. I'm just not a huge fan of picking a single stock ticker ETF, but I know a lot of people like doing that. So YMAX is going to be one of the runner-ups, as well as maybe XDTE or QDTE. I'll put XDTE, which is the round hill 0 days to expiry covered call ETF. And because there's a lot of good options, we will probably choose one more. USOI is going to be for oil, but I would probably choose a tech-focused one, either GPTY or LFGY. Those are going to be great picks. I'll probably just highlight them both here for Friday. So this is what a daily dividend ETF portfolio would look like. And if you have like a test or play portfolio, you could just buy some of these shares of each day that we have highlighted. Of course, yours is probably going to look different than mine, but these are my personal picks. This is what I would do if I really wanted a daily dividend portfolio. You could say allocate $1,000 to each day, each payday. So if you have Monday, you would put 5,000 to blocks, 5,000 to Maggie. If you have Tuesday, you would put about $333 into each of these three. Wednesday, you would put 500 into each. Thursday, 500 into each. And Friday, since we have 5 ETFs, you would put about 200 into each of these ETFs to have an equal weighting. Now, the benefits of a daily dividend portfolio, you're going to have the frequent cash flow. It's the most frequent cash flow you can ever have. It's going to feel like a paycheck from the market every single day, and you're going to have that huge psychological boost. Regular rewards keep you engaged, which is probably one of the most important aspects of investing. A lot of people look past that, and even if a daily dividend portfolio doesn't really have much effect in the long run, it's really about mentality, which is very difficult for many investors, and it's more difficult than people think. And we did mention in the beginning of the video that there are risks. Now, there's going to be high turnover in fees because most of these are going to be options-based ETFs, and they're going to have very high expense ratios. And there's also the possibility of NAV erosion. So these high yields can come at a cost of shrinking share price over time if the underlyings do not perform well. And tax treatment can be quite complicated because each distribution could either be taxed as ordinary income or return of capital. And you don't really know unless you're tracking your distributions very closely, which is going to be a lot of work if you're receiving distributions every single day. So usually it's a big surprise at the end of the year. And of course, you're going to have huge concentration risk. Many of these weekly payers are going to have high volatility. They're mostly going to be tech focused because they have higher volatility, or they're going to be single stock focused like we see on Tuesday, as well as huge players in the crypto industry because of the volatility for the option premiums. So that's it for this video. Remember, the frequency of payments doesn't guarantee total return, and always weigh the yield against share price stability as well as risk. I definitely wouldn't recommend building a portfolio based off of daily dividends, but it's a fun little experiment. Let me know down in the comments what yours would look like.